Good afternoon, everyone, and welcome to our dairy margin coverage briefing this afternoon to announce the sign up for the 2026 enrollment period here at FSA. My name is Jamie White. I'm currently serving as your acting deputy administrator for farm programs. To kick off the call, I'd like to turn the call over to our esteemed administrator, Mr. Bill Beam, who's coming to you all live from the Pennsylvania Farm Show in Harrisburg, Pennsylvania this afternoon. Mr. Beam, I will let you open with a few comments, sir.
Okay, well, thank you, Jamie, and welcome everybody. As Jamie said, today I'm coming to you from the Pennsylvania Farm Show in Harrisburg, Pennsylvania, the largest indoor ag show in the United States, I'm told. So we have a large dairy state, a lot of cows here being showed, and of course, all livestock from beef to hogs to sheep to goats. So I apologize for the noise, but we're live. But first of all, let me thank you all for joining us today. DMC is something that if I was a dairy farmer, I would definitely sign up for it. And we have some nice discounts for you that are willing to sign up for multiple years. And let's be honest, how many times can you sign up for something like this and get margin coverage, if you will, or protection? So the bottom line is my team has worked tirelessly at this. We appreciate Jamie and Doug Kilgore and others for all the effort they put into this. And I appreciate your interest, most importantly, for helping to spread the word so that dairy producers know now is the time to come sign up for DMC. So thank you, everybody. And once again, from the Pennsylvania Farm Show, if you live close by, I recommend you stop by and visit it if you haven't. But if you don't, maybe you can make future plans. And Jamie, I will kick it back to you.
Thank you, Bill. That's wonderful. Very excited that you were able to join us this afternoon. Before we go ahead and get started, I'd like to flag a couple of housekeeping items for those of you on the call. We are recording this call so that it will be available to others who are not able to join the call, or if you'd like to go back and look at any specific items after the call. And we will be certain to share the link and that recording with those that were invited to attend the stakeholder briefing this afternoon. To ensure that we are able to, in a timely manner, address any questions that you might have, please utilize the chat option available in the Teams meeting today. Drop the question in the chat and we will do our best to respond to those in both writing as well as verbally. And following the call, we will provide a follow-up summary of all questions and answers in writing as well. As our administrator has indicated, now is the time to sign up for DMC. Certainly sign up was announced this Monday, January 12th, and it does run through Thursday, February 26th. So it is a very short, intense, and brief sign up for 2026 and to accommodate that important production history update as well. I know it goes without saying that we at FSA cannot lift up and support our dairy producers without partnership and collaboration with the dairy stakeholders as well as those milk marketing organizations. And I know Mr. Kilgore has very important information to share with all of you to support those participating dairies as we move forward in this enrollment period. I am going to flag 2 additional sign-up periods that I know our team will flag as well, but because they are time sensitive, it's worth repeating twice. The milk loss program, which is designed to provide assistance for losses of uncompensated dumped milk in 23-24. That sign-up period is also underway and concludes on January 23rd. In addition to the milk loss program, the on-farm stored commodity loss program, which was previously announced to provide assistance for losses of on-farm stored commodities and forage that would be harvested and produced on the farm, is running now through January 23rd as well. I do know that our team is going to discuss those programs in more intimate detail, but just wanted to flag those important deadlines at the top of the call. Before we begin our presentation, I would like to acknowledge that we have critically important folks on the line, the folks that have worked tirelessly to implement and deploy this important program and roll out those OBA enhancements. We have Danielle Hook on the line, who is our price support division director, we have Doug Kilgore, who serves as the program manager for our dairy programs. Melissa Turnmeyer is an ag program specialist that supports dairy programs, and Daniel Roeder is a program specialist that lifts up and supports our software development to support the important implementation of the dairy programs within the county office. So with that, Doug, I will turn things over to you, sir, to get started.
Welcome, everyone, and welcome, dairy stakeholders. It's my pleasure to be with you this afternoon. I promise you this will not be a long call. I believe you'll find it informative, and I think you'll find it to be of value to you. First and foremost, I want to talk about 2026 dairy margin coverage. And I think everybody on the call probably realizes what it is and what it's about. But again, I think it's still worth the time and effort to going through through a couple of things about DMC. DMC was authorized under the One Big Beautiful Bill Act for calendar year 2026 through 2031. The DMC rule was published on January 12th, 2026, which was just a couple days ago. The regulation governing DMC is found at 7 CFR Part 1430, Subpart D. So if you want to get into the nitty-gritty of the DMC regulation, that's where it's at. Let's get into the highlights of DMC. And the good news is that the changes to 2026 DMC are very positive. Very positive changes. They're changes I think the industry and our dairy producers are supportive of. Number one, and probably the most important one, dairy operations will establish a new production history in 2026. Everyone that comes in will establish a new production history in 2026. That's, over the years, that's been one of the complaints about DMC is producers wanted to have a more current production history. Guess what? We can do that in 2026. The second bullet, dairy operations have the option to lock in coverage levels for 6 years from 2026 through 2031. Locking coverage is not new. It's been around since 2019. But what makes it unique in this year is producers have the opportunity to sign up to lock in those coverages for 6 years. And now is the time to do it. So we cannot emphasize that message enough because I believe it is that important. And the third bullet, Tier 1 pounds of covered milk production has increased from 5 million pounds to 6 million pounds. And this bullet really benefits the mid-sized and the larger producers. Now producers in that Tier 1 range can cover up to 6 million pounds, and that benefits the larger producers too. So that's a benefit for more of the larger producers in the industry. As was mentioned by Jamie, and I'll mention again, the coverage election period began on Monday, January 12th, and it will end on Thursday, February 26th, 2026. So we basically have 6 weeks. I think it's something like 42 days. We've got a lot of work to do in that time. Dairy operations requesting DMC coverage will establish a production history on the CCC 800, and then they will complete a CCC 801 contract according to our One DMC protocols. One of the first things you need to understand about DMC this year is in regards to the establishment of a new production history is, according to DMC, is it an existing dairy operation or is it a new dairy operation? So to establish a production history, our county offices will first need to determine if the dairy operation is existing or new. So an existing dairy operation is one that started commercially marketing milk on or before January 1, 2023. And a new dairy operation, according to DMC, started commercially marketing milk after January 1, 2023, which is January 2, 2023 to the current day. So keep that in mind as we go through the slides here, whether the dairy operation is new or existing. To establish a production history in DMC, dairy operations are going to need to provide production evidence. And most likely they're going to be milk marketing statements. Milk marketing statements are a summary of milk marketings from the milk marketing organization with milk production totals by year. They can be monthly milk check stubs or monthly statements, or they can be other payment records or receipts for commercially marketed milk. So the bottom line is to establish a production history, we're going to need production evidence, and that means we're going to need some sort of milk marketing statements. As I mentioned earlier about existing dairy operations, if the participating dairy operation is an existing dairy operation that has been commercially marketing milk on or before January 1, 2023, then their production history is determined from the hire of milk marketings of the years of 2021, 2022, or 2023. Let me state that again. For the existing dairy operations, their production history is going to be determined from the hire of 2021, 2022, or 2023. Now let's talk a little bit about new dairy operations. And they're the dairy operations that started commercially marketing milk after January 1, 2023. Their production history will be determined from the first year marketings, even if it's a partial year, by either of the following methods. And number one is the extrapolation method. That is the volume of actual milk marketings for the months the dairy operation has been in operation, extrapolated to a yearly amount. The second method is the rolling herd average method, and it's an estimate of the actual milk marketings of the participating dairy operation relative to the national rolling herd average for the year they started producing and commercially marketing milk. All right, let's talk a little bit about 2026 DMC coverage election period options. A dairy operation may register for DMC annually, or they can elect to make a one-time election to lock in coverage levels for 6 years. So let me say that again. The dairy operation can choose to enroll annually each year. It's up to them to come in or not. Or they can elect to make a one-time election to lock in coverage levels for 6 years. And they are so locked in for those 6 years. Let's talk a little bit about a lock-in registration so everyone understands what it means. It's a 6-year locked-in contract. The dairy operations will have the same coverage elections for all 6 years. It means the big lock-in benefit is they receive a 25% discount of the DMC premiums. And the other main point here on this slide is the lock-in election is only available during this 2026 DMC enrollment period. So this is their chance to lock in coverage levels here in 2026. A few more points on lock-in registration. If you are locked in, you still must pay the annual administrative fee, and you still must pay your premiums fee annually. That's required. And the dairy operation must certify that they are commercially marketing milk every year. There's one exception I want to mention here, and if there is a new dairy operation, say a new dairy operation starts up milk production a month after the coverage election period ends, that dairy operation has the option to come in, establish a production history, create a DMC contract, and have that DMC contract eligible for lock-in coverage. So the new dairy operations that come on board after the 26 enrollment period may select lock-in coverage. The next slide is about coverage elections, and really this is no change here, but it's more of a reminder. When a dairy operation chooses the coverage elections for the year, they choose a coverage percentage whatever their production history, they have the option to select 5 to 95% of that production history. And they also have a coverage margin trigger by tier. Okay, and tier 1 is the first 6 million pounds, and that margin range is from 4 to 950 in 50-cent increments. And the second tier, which is over 6 million pounds, is in the $4 through $8 range in 50-cent increments. I want to talk a little bit about premium fee obligations. If a dairy operation selects buy-up coverage, they are responsible for paying those premium fees. They are due by September 1 of the coverage year. And if they're not paid by September 1, we at FSA create what we call receivables, which really goes after to collect those premiums over time by whatever means we need, whatever means we can. But I'm bringing this slide up for one reason. We do have a significant number of dairy operations that still have 2025 unpaid premium fees. And the reason I'm mentioning to this group is a 2026 DMC contract will not be approved for a dairy operation with unpaid 25 premiums. So the bottom line is, folks, if there are dairy operations that have not paid their premiums from last year, they've got to be paid before they'll have a contract here in 2026. My final slide on DMC, and really I think this is what we're looking for the folks on the call to do, is to assist us in communicating the importance of dairy margin coverage to our dairy industry. If you would, encourage dairy operations to enroll in 2026 DMC. Remind dairy operations that the 2026 DMC sign-up is the only time to lock in coverage levels for 6 years and take advantage of that 25% premium discount. I think that's a big deal. We need to inform dairy operations they will need to establish a new production history based on their more recent production levels. We need to advise dairy operations that production evidence, including milk marketing statements, are required to establish a production history and to enroll in 2026. And finally, and really that's the importance of this call, is let's communicate the importance of DMC. It's a successful risk management program that protects dairy operations from the declines in milk prices and increases in feed costs. So I believe we were going to pause for a second. Are there any questions that we want to address at this point?
I think we're good to move on, Doug.
Okay, sounds good. All right. I want to talk a little bit about two other programs. I know Jamie mentioned these. These are two programs that are open right now. I consider both of these programs unique, but they do serve a special purpose. And since we have some dairy stakeholders on the call, we thought there'd be value to bring them up. And maybe you folks can help spread the word on them. We're a little less than we think we should have more applicants than we do at this point, and that's part of the reason why we're sharing these couple slides with you. I promise it's actually going to be a quick presentation. Let's talk a little bit about the milk loss program. It was authorized under the American Relief Act 2025, and it's designed to pay for eligible losses that occurred in calendar years 2023 and 2024. I also want to mention milk loss is not new. We had the milk loss program back in 2023, and during that sign up, we paid for eligible losses in 2020, 21, and 2022. So it's not new, but it's another go round of the program. The purpose: MLP provides assistance to eligible dairy operations for milk that was dumped or removed without compensation from the commercial milk market due to a qualifying weather disaster event. So I think probably most dairy folks realize there's a fair amount of milk dumped for a variety of reasons. And probably a lot of the folks on the call realize that lots of times when milk is dumped on the farm, the cooperatives may provide compensation for that milk. This program really provides compensation when the cooperative or the milk handler or whatever does not pay for that dumped milk. So that's what's unique about it. We don't see a lot of participants, but it does fill a void that needs filled. These are the disaster relief weather events. I can tell you the several years that we've had this program, winter storms are the big ones. I mean, usually the winter storms in the northern states are where we receive most of the MLP applications. But I can tell you right now, for this year, we're also seeing some applications for hurricanes and floods. But again, these are the weather events, disaster losses that cause the dump milk, and they are part of the eligibility in the program. I'm going to mention the payment calculation just to kind of give you a sense of how we come up with paying folks for MLP. We take the average per cow daily milk production for the base period, which is the month prior to the loss, and we multiply that average daily milk production by the number of cows, and we multiply that by the number of days milk was dumped in the claim period, which gives us a number that we divide by 100 to convert that to hundredweight of milk loss. And then we turn around and multiply that hundredweight of milk loss by the marketing statement payment price for that producer. And that total is then multiplied by 75%. So ultimately, MLP pays for 75% of the milk loss value that producer suffered. But again, it's a positive program in that respect, and it certainly fits the need for those that have been affected to winter storms. Again, why are we telling you folks about it? Well, we're promoting the details of it. If you're aware of any weather events out there that maybe some producers were affected, I mean, you saw the list of weather events. Please pass this information on, and certainly direct all MLP questions to the FSA National Office. I can tell you that this program closes January 23rd. So we're looking at the end of next week for MLP applications to make their way to county FSA offices. So are there any questions on MLP? Now I'm going to go to our final program, and this is not my program, but I'll work my way through it. This is the on-farm stored commodity loss program. We're providing this information for dairy farmers. Again, it's similar to MLP in a lot of different ways. If a dairy farmer has lost feed, such as grain, hay, silage, that was stored in an on-farm structure and affected due to a weather event, they might be eligible for compensation under on-farm storage. The dairy farmer must have grown the eligible commodity, which includes grain, hay, silage, derived from an eligible list of on-farm commodities. The grain, hay, or silage must have been stored on-farm in a storage structure which was damaged due to a weather event. So I think you can see the similarities to MLP. This looks similar to the MLP. These are the qualifying disaster events for on-farm storage. Wildfires, hurricanes, floods, ferocious heat, tornadoes, storms, freeze, smoke, and qualifying drought. So again, if you have a structure where there's a loss that occurred in that structure, and these are the disaster events that certainly are part of the program. These are a list of the commodity eligibilities, and you can see there's quite the list there. And we also are making special note that silage is even applicable here. So keep that in mind as we take a look at this on-farm program. Again, on-farm storage, it was authorized under the same title as MLP, and it provides assistance to producers who suffered losses of eligible commodities while stored in on-farm structures due to qualifying disaster events that occurred in 2023 and 2024 calendar years. The on-farm has $5 million in funding that's been set aside for on-farm. And like MLP, this program is similar to previous on-farm storage loss programs, which covered losses back in calendar years 18 and 19. So general eligibility, that must have been stored in a structure that was damaged or destroyed storage as a result of the disaster event. The structure must have been located on the farm and used for storage of the eligible commodities produced and stored on farm until the commodity is marketed, delivered, or intended for private use. And the commodity must have been grown by the applicant. So I don't know that I'm going to get into much more on this. I will mention the ineligibility. Commodities stored in a commercial storage facility, such as a warehouse, wrapped in plastic or other material and left in fields uncovered by another structure, are not eligible. Losses related to excess of moisture, which happens when a commodity is stored but not dried sufficiently, are not included in this program, as expected that proper drying should occur as part of harvest and storage. And quality losses also are not included in this program because these losses are due to pre-harvest conditions. So payment rates are based on NASS established national market year averages. There will be one rate per commodity per loss year for 23 and 24. And the on-farm payment rate will be 75% of the NASS MYA rate, meaning that the producer absorbs 25% of the loss. And payments will be subject to proration to ensure total funding is exceeded. So I'm not going to get into payment limitation or certainly here's the website if you need to want to look further about on-farm storage. We're now at the point where I'm going to open it up and see if there are any questions on on-farm storage, MLP, or dairy margin coverage. Okay, are we going to have any questions, or are we closing this up for the meeting? Danny, are we done, or does Jamie have some final comments?
I think we're done. I just want to thank everybody for participating today.
Thank you. Thank you very much, folks. We hope the information we shared was informative. If we can assist you in any way, if you have any questions going forward, please do not hesitate to ask us. We're here to certainly serve the dairy producers and the dairy industry that are out there. And if there's something that we can do to help get them signed up for 2026 DMC or MLP or on-farm storage commodity loss, we're here to do that. So we thank you for your attendance.